Is your mortgage deal really competitive? And more importantly, how can you check it yourself without needing a broker right away? Let's jump straight in. First things first, why bother checking your mortgage deal? Well, mortgage rates shift all of the time. Lenders adjust their deals based on the Bank of England base rate, competition, and even their own lending targets. So even if you locked in a decent rate a few years ago, the market might have moved and you could now be paying more than you need to. Staying proactive could mean better results. It means better rates, lower monthly payments, and potentially real long-term savings. Now, before you can compare anything, you need to know exactly what you have right now. So get your original mortgage offer or log into your lender's online portal and find these key details. Firstly, your current interest rate. The type of mortgage that you've currently got, whether that's a fixed, a tracker or a variable. How long is left on your current deal, especially if you're near the end of a fixed rate. Your remaining mortgage balance and any early repayment charges. And these are really important because you're going to have to pay these if you move your mortgage to a different provider. Jot these down as it'll make comparison much easier later on. And now it's time for the fun part, shopping around. And here's how you can do it yourself. Firstly, use a trusted UK comparison site such as Money Supermarket or Compare the Market and enter your balance, your property value and the deal length preferences to see what lenders are offering today. Now, some lenders have exclusive deals that are only available through brokers, so whilst assessing the market yourself is a good starting point, we would always recommend speaking to a reputable whole of market mortgage broker to ensure you get the very best deal available for your circumstances. Now, on the comparison site, you're looking for live rate tables. They're updated daily and give you a real snapshot of what's competitive at the moment. Comparing interest rates is a really good starting point, but don't just stop there. You should also compare the overall cost. Here's the key details of what to look at. Firstly, the new monthly payments, any setup fees like arrangement fees or valuation costs, the early repayment charges that are payable both on your existing deal but also on the new deal once you move over to them, any incentives such as cashback or free legals, and sometimes a slightly higher rate with lower fees can actually work out cheaper overall, and it depends on how much you're borrowing and how long you plan to stay on the deal. Now, doing a DIY market check, as I said earlier, is great, but mortgages are complex financial products and it's often worth speaking to a professional broker. They can access deals that aren't available directly to the public and can do all the heavy lifting for you. They'll also provide advice to make sure that what you're planning to do is the right thing for you. Even if you do use a broker later, knowing where you stand and what's competitive today makes you a much smarter customer. So, is your mortgage deal really competitive?